Good afternoon. We will pay attention to analysis and interpretation today, and we will pay special attention to the debtor's average collection period. This indicates how long it will take debtors to pay their outstanding accounts for credit sale. So after the date the goods were sold to them, how long it takes them to pay for the goods. The longer it takes, the more the firm will have to make use of other sources to finance the expenses and liabilities, because the cash is tied up in assets, because the goods must be sold and you must collect the money from the debtors before it's converted into cash. So you will like to get the money in as quickly as possible, so that you have the cash available to pay for your expenses and liabilities. Here is the extract from the income statement for the year ended 30 June and the current assets and non-current assets that is available, so that we can calculate the debtor's average collection period. To do this calculation, we need the average debtors. That means the amount of debtors at the beginning of the year plus the debtors at the end of the year divided by 2. So we will take the 810,000 at the end of the year plus the 960,000 at the beginning of the year divided by 2 to work out what is your average debtors for the year. This average debtors must be divided by the credit sales. And the credit sales must be calculated because they give us the total sales for 2015 as 9 million, but only 70% of the sales were on credit. So we can only work out 70% of this 9 million, and that will give us 6.3 million is the credit sales for the year. Then we multiply this with 365 to work out how many days it takes to pay. They give us the information for 2014. In 2014, it took 72 days for the debtors to pay their accounts. In 2015, it took 51 days to pay. So it means that there is a very good improvement between 2014 and 2015. The debtor's average collection period improved from 72 days in 2014 to 51 days in 2015. So it means in 2015 it took on average 51 days after the goods were sold before the debtors paid their accounts. Although this improved a lot, the acceptable credit term is 30 days, so you will still have to see if you can improve this situation to reduce the 51 days to 30 days. If they don't improve this debtors collection period, they can experience cash flow problems. This indicates how long the debtors take to pay their outstanding accounts for credit sales, because the longer it takes, the more the firm will have to make use of other sources, so from borrowings or creditors, to finance the expenses, because all the cash is then tied up in this debtors. Until the debtors pay the firm is actually financing the debtors for that whole time, because they owe the money to the business and the money of the business is tied up in this debtors. The aim of the company should be to collect payments from debtors as quickly as possible, so that the cash can be available when it's needed to pay for expenses and liabilities, and that they don't have to use loans or a bank overdraft to pay for this. Compare this collection period with the policy of the business and also with the collection period of competitors to determine whether it's satisfactory, so that you can take certain steps to improve the situation if you feel it's not satisfactory. If the policy of the company is 30 days, the result in both these years are actually bad. The company should take the following steps to improve this situation. Offer discount to debtors that pay within 30 days to encourage them to pay quicker. Charge interest on the accounts of customers that owe for more than 30 days to encourage them to pay within the required time, that they don't have to pay the interest. Contact clients that don't pay in time to remind them. Don't allow more credit to a client if they don't pay in time. Investigate the creditability of clients before the credit limit is determined, to determine whether these people will actually pay in the required time and whether they've got a good creditability with other businesses. What did we learn? It is important to determine the average collection period to ensure that clients don't take too long to pay, because the inflow of this cash at the expected time is very important, because the business depends on this money to pay creditors and expenses. If it's not according to the required norm of the industry or according to the principles of the business, steps should be taken if the debtors don't pay in time to prevent cash flow problems.